Bam. Lifestyle investing where we
Yes.
invest based off our lifestyle to build future lifestyle. Mike, myself.
Right.
What's up, boss?
Hey, man.
How you feeling?
Good. We're here.
I know.
We're at my house.
We are.
Yeah, I like it.
I do like it. It's a good
Yeah,
feeling.
it's nice. It's good to be home. It's been a long day, man.
Yeah.
Yeah.
A hustle of a day.
Yeah.
This is what I want to talk about.
Okay.
Okay? I didn't bring it up to
No,
you.
you didn't tell me.
Yeah. So this last week was a huge week for earnings.
Okay.
Last week there was a lot of tech stuff that came out towards the end of the week. Also a few guys on Monday, and then there was a lot of financial stocks that came out. B of A, Citi, Goldman,
Okay.
right, Morgan, JP, all those guys came
Yeah.
out. But what's interesting, and we were just talking about this, right, is all these earnings were coming out, but the stock market still went down. Like it's
Okay.
still going down.
Yeah.
Like you know, and last week, right, I think it was like Tuesday, Wednesday. Wednesday was like the biggest dip since last February.
Okay.
And then Thursday kept going down, Friday kept going down, and Monday it kept going down. And so I think it's an interesting time right now as one, interest rates go up. The
Right.
treasury is at like over 3% right now.
Yeah.
And so then that's creating an influx on the stock market.
Yeah, prime is 2.25.
Which is crazy.
Yeah.
Explain prime real quick for those that don't understand.
It's the money that the Fed lends the banks, lends to the banks at. So Bank of America, if you're getting a credit card, they're borrowing that money from the Federal Reserve at 2.25. And so your credit card rates and your car loan rates are based off that. Mortgages is kind of based on it in a weird way because if investors are not investing in bonds, they're investing in mortgages, and so it's a little bit tied because it kind of affects the bond rate. I mean, it's a little bit weird, but the main thing that the Fed rate or the prime rate affects is credit cards, any variable loans. So if your mortgage is an ARM, which is unlikely, but it's still possible, it's affected by that. But yeah, so the simplest way is it's what the banks borrow money at.
That's good.
Yeah.
Yeah. Let's just dumb it down for.
Yeah, because so what we understand when we were both in retail banking, when prime was 0, we were still charging people 3% on variable lines of credit, HELOC or whatever. It's prime plus something. When I first started doing retail banking, you could get a HELOC at a prime minus. That was the promotion. Prime was at 7 at that time in 2004, 2005. So you could get a HELOC at prime minus 1.
Wow.
Yeah, and so those days could come back. I mean, prime, since I was in the business, had gone from 7 all the way down to
0, right?
Well,
Or
to 3.
negative. Oh, to 3.
Yeah. So probably the prime rate. So ours was prime. Yeah, no, so I guess it would be. Yeah, because right now we're at prime plus 3 or whatever.
Yeah.
When it was 0, we were at prime plus 3. Back when it was prime was 7, we were at prime minus 1. So yeah, that's true. It went from 7 to 0 to now back to 2.25.
Interesting.
Yeah.
Interesting.
And I haven't checked in lately, but what are the banks doing HELOCs at? Do you know?
I don't know.
Yeah, it'd be interesting to find out.
Yeah.
My guess is 5.
Yeah, I
5 and
would
a
say
quarter.
yeah. Between 5
maybe
and
3
5 and a
over,
half.
3 over prime.
Something like that.
Yeah.
Yeah. Which is
Yeah,
pretty standard.
and yeah, I think the Fed rate is different than prime. I think prime is set by the Fed.
Yeah.
Yeah, because I think when the Fed raises their prime or raises their rate, then prime just exactly mimics that. But that's something that I'll do some research on, and we'll talk about it at a future video. But definitely, it's variable rates. That's what it affects.
So how does this affect an investor? Let's talk about that.
Okay.
Right. One thing that I want to notate is well, first of all, you probably know this better than I do. How does the Fed interest rate change the U.S. Treasury yield, the notes?
Right. Okay, like the bonds.
Bonds, yeah.
Yeah.
bonds.
It makes it, so I don't know exactly, but the basic how I understand it is it makes it either a more attractive or a less attractive investment. So as prime changes, then having the bond is either more or less attractive. So in other words, if prime goes up, people don't want to get a 2% bond anymore because they can get a 3% on their money, lending it in a different way. So it's all about where do the actual investors who are putting up the funds want to put their money. If they're doing it in bonds, that is because the mortgage rates are too low. Basically, they're not making enough money for the risk. Once mortgage rates go higher, it's a sign that the bond rates are a little bit lower because then people are willing to, basically, if you're a bond investor as a big corporation, and you can't make the money on the bond, you'll go to the mortgages. If you can't make the money on the mortgages, you'll go to the bonds. You want to mitigate your risk. So that doesn't exactly answer your question because I don't know exactly how the Treasury and Prime are tied. I do know how Treasury and mortgage are tied, and that's kind of what I just explained is where when there's more risk for a lower return, bonds are going to do better. When the bonds are too low, mortgage rates go up because basically the companies who buy the loan. So when you do a loan at Bank of America for your house, Bank of America doesn't keep that; they sell it to an investor. And in order to get the investor to buy it, they have to make it attractive. So when mortgage rates are raising, it's because they needed to put the rate up there. Otherwise, they weren't going to get an investor to buy it because bonds would have been more attractive. So that's how Treasury and mortgage are tied. They're really closely tied together.
Interesting.
Yeah.
And it's really tied too on the stock market perspective too.
Yeah.
Right, because if money is getting poured into the to these bonds.
Yeah, mutual funds tied in.
Exactly.
Yeah,
that means there's just a shift from the stock market.
Yeah.
And so I think we're seeing that really big right now as the rates do increase.
Yeah.
Less
it's a more
money.
attractive investment.
Exactly.
The stock market is not as attractive.
Exactly.
Yeah.
Why do equities when I can get a guaranteed
Right.
3.25%, 3.5%,
Right.
from the government? It's pretty simple math. And especially like when you're investing, you're thinking about the future. And so like even though like some of these earnings are like kick ass right now, like people are thinking, well, okay, they're doing well right now, but what about in 6 months, right? Like what's going to be going on there when rates keep going up? So then less people are going to be investing in the stock market. They're going to be investing on that side.
Yeah.
Right. So it's an interesting time right now if you want to do the long play on the stock.
Yeah,
side.
and I think if we were more like in tune with the pulse of everything, we would see that it just goes back and forth all the time.
Oh yeah, 100%.
Yeah. But right now we care a little bit more because there's more skin in the game.
Yeah.
Yeah.
Yeah. For sure.
Yeah. You're like every 2 seconds.
Uh-oh.
Help!
Oh man, that's too funny. That is too funny.
It's not funny.
It is funny.
It is. I mean, in the long run, it's funny.
Yeah.
But right now, it's not funny.
No. I want my money.
Yeah,
back.
exactly.
I want my money back and more.
Yeah.
And more.
Me
Where's
too.
my money?
Yeah.
Yeah,
I'm still down negative over the last couple weeks, but I'm still playing with money that I got from that New Age beverage company. I'm still up like a little less than 20% because I made a quick investment. It went up and then I got out.
Mm-hmm.
Because there's basically in the cannabis stocks right now, it's as volatile as the Bitcoin stocks.
Oh yeah,
Yeah,
that's what
because
I'm saying.
nobody knows what's going to happen.
Uh-huh.
And Canada just legalized marijuana countrywide, so the whole country is legal. So the Canadian cannabis stocks have been going up. Yeah, and that's the tip I got, and I invested in it, and then I started feeling morally bad about it. My conscience got in the way. I still made some, and I've still set up my limit sells to where I won't get out of there for less than 10% as long as they keep going up. So I'm going to make something, but I wish I wouldn't have done it because it just caused me stress. It was not worth the couple $100 that I made because it was eating away at me.
Yeah.
And I was obsessing about it all day. It took me away from like doing my job because I kept clicking the refresh button.
Well, there you go. There you guys go. Yeah. For a quick note, because I have a thought that I want to bring up. If you invest in something and it's ruining your life or changing your life in a negative way,
making it
even if you double up,
right?
Is that a good investment?
Right.
Is that a good?
And I don't even know the effect that it has on your actual life.
Yeah.
You know what I mean? Like, am I going to die 2 years earlier now because of the stress I put my heart through? You know what I'm saying?
For real.
Yeah.
That's true.
Yeah, what kind of imprint is it leaving? But I can't be Gandhi either, you know what I mean? I can't only invest in, like, fair trade, one source, granola shoes or whatever. You know what I mean? Like, so it's... I don't know. Nobody gets out of this thing alive.
Granola shoes.
Everybody's going to die. I'd like to do it with a little bit more money than I have today. That'd be nice. Or maybe I'd like to spend my last dollar on my last day. Is that too much?
I don't know. I really don't know.
Yeah, it depends on what I spend it on.
Question.
Yeah.
So is it good to invest when you feel like... Is it good... First of all, is it good to invest when the earnings are coming out? What do you think?
You got to time it right if you're looking for short term. And always, it's not... The stock market is a living being in a way, you know what I mean?
Mm-hmm.
And what I'm starting to learn, and maybe it needs to get beaten in my head with some more pain, is that it's not about trying to time the market. It's about leaving it in there for a long time.
Yeah, time in the market.
Yeah, right. So I had some success because you told me about Bank of America at the right time. So my only experience with earnings season is buying it and then it going up $1 a share after I buy it.
Yeah.
So I'm getting the good benefit of what you told me. But you're getting a different experience. And I don't think it has to do with earnings. I think if it would have been a normal market, when the earnings came out, yours just would have kept going up.
For sure.
Right. And then I would have missed out because I was setting my limit at a certain dollar amount that I felt comfortable with.
Mm-hmm.
You know what I mean? Like, I wouldn't have bought it if it would have stayed higher because the computer just wouldn't have done it.
Yeah.
You know what I'm saying? And maybe I would have, if it went a couple days, I would have been like, oh crap, and had to tweak what I was doing. So I don't have much experience with buying around earnings time, but because you told me it, why don't you tell us about your experience with buying around earnings times? And because maybe this is the first time that you've done it at a time where the market was taking a little dip at the same time.
Yeah. And I think because that's always really been my approach. Where I constantly do day trading, right? But earnings is usually when I either double or triple or quadruple up and try and do like that quick, few day turnaround. And I think one thing to consider is even if you're investing in a company where you think the earnings is going to be going up, keep in effect or keep in mind like market conditions, right? So I think I should have done a better job of considering the fact, one, that bonds are going up, right? So then investors are like, okay, that's less money towards the bank, right? And the other thing too is like, with the real estate market and how that affects the banks a lot as well.
Right.
Like there's the last couple of months, there's been so many articles being writing out saying like
housing market.
Yeah. We hit the peak in Southern California. Like we're at the peak right now, which is exactly what happened in 2006. People are lowering prices for the first time because cost of living. You're seeing all of these things where like things are starting to mellow out. And if the real estate market starts to mellow out, that in turn means less mortgages, which in turn means less income for the banks.
Right.
Because they make a majority of the money through mortgages.
Okay.
So
yeah, I guess that makes sense. I know they make a majority of their money just through lending in general.
Well, yeah,
the biggest tickets are mortgages.
Yeah.
Yeah, because they sell them. So say Bank of America does a loan for $300,000, your home loan, the next week or maybe a month. I think they have 90 days to sell it. They make anywhere from about 2.25% to 6% on the back. So they can make up to $18,000, boom, like that, just by unloading that loan. They're selling it to somebody who's going to make the profit over the 30-year term. Or they're basically they sell it into a pool, which is $1 million or more of loans to investors, and they're usually the same rates or whatever, so that investors can say, oh yeah, I want all the 4.75s with people with 720 credit or higher, and they'll buy that. And we're talking about companies like Wells Fargo, Bank of New York. Those are the people who are buying those pools. And so that makes sense. Here's two things that we know about what you just said there. One, that the real estate prices over the last 80 years have gone up by 6%. That's even including the crash in 2008. So what that means is every 20 years, house prices triple. If you know somebody that bought in 1998, their house is worth 3 times that much today. That's just the plain facts, even including the crash. So knowing that, okay, that should give us a nice calm feeling. But the other part is what we know, at least what I've learned. Like, I don't know a ton about investing. I don't know how the prime rate affects the treasury. Like, I'm going to have to go learn about that. This is not here's how the stock market investing works. This is, here's how to take where you're at in life. This is what this show is. Take where you're at in life and do something more with it.
Yeah.
Yes, fail. Yes, learn. If you're trying to succeed, even if you stumble along the path, you're going to figure out how to get there. But one thing that I have learned is that the stock market is based on speculation. So if the country is being told by the media that things are going to go down, people are going to freak out until they see proof otherwise. If you're a news source, if you're CNN, if you're NBC, if you're just a local news, what you want to do is get people to tune in so you can sell advertising. And here's a good catchphrase to get people to tune in. house prices going down, are you going to lose all your equity? Tune in at 11.
Yeah.
Yeah. So that's what people are feeling. So yeah, people pump the brakes a little bit. They're gonna stop putting money in the stock market right now. And I feel like I'm telling you this because I want to make you feel better. Some of that is true, but
Well,
this is all true.
Yeah.
It's all true.
Yeah.
Media affects the stock market.
100%.
People's fear does. Saying that we've reached the peak in California, I totally believe that's just to sell more advertising for the news because it's not true. If you look at every single year, house prices go down around this time of year. I bought my house in December because of that.
Mm-hmm.
And then guess what happened in March? Things start going crazy. And then it just slows down because kids are in school. You don't want to move while the kids are in school. People sign leases in the summer. You don't want to break your lease. Yeah, you don't want to even go out shopping and looking at houses because it's dark and it's windy and it's cold and it's wet. So this happens all the time. Like I've talked about with you before. I don't know if I've shared it on here, but I got slapped in the face because the last 2 months I wasn't prospecting, all of August and September, and I'm paying for it right now by not having anything in my pipeline. Now, for the last 2 or 3 weeks, I've been prospecting and I'm getting appointments, I'm getting people, and I'm meeting people, and it's great, and I'm going to have a decent holiday season because of it. But what I learned is, this happens every year.
Yeah.
Plan for it. I thought I was so busy in the spring and summer, how could this ever stop? Well, because that's just what happens.
Yeah.
So I got to prepare for that. I have to know so next year I don't make the same mistake. So just like that. I think people are reacting emotionally, and
100%.
we know that is what's causing the stock market to dip just a little bit. I think if you're making a sound investment in a bank that you know is making money, you're going to be fine. That's my thought about earnings. It's going to come back. And stock market's been doing an average of somewhere around, 4 to 6% over the last 80 years as well. Yeah, and sometimes 12 to 15%, which is what it's been the last couple of years. Some years it drops 20%, which we saw, of course, throughout the crash in 2008 and 2009. So yeah, it's crazy. I mean, it's crazy and it's exciting and it's fun. It's all a lesson, man. I even pulled out your dad's paperwork the other day.
Really?
When I was thinking about my cannabis stocks, when I was thinking about Bank of America, because I have it in my office, and I was just like, okay. Because he was looking at Fannie Mae and Freddie Mac, and he had those marks on there about, okay, hey, here's what you do. And I've used that kind of strategy of where have the ups and downs been? In other words, once it goes down below this mark, it might keep going down, and once it goes up above this mark, it might keep going up, based on the feel and when the momentum starts.
Yeah.
Because there's this point where it breaks past the expectation, and then it's like, oh no, this is new territory.
Green grass, baby.
Yeah.
Green grass.
Yeah.
That's good, man.
Yeah.
Yeah. Super insightful.
Cool. Thanks, man.
Yeah.
Yeah, I'm feeling it.
Ready to drop a $100,000 off one?
Yeah, exactly.
There we go.
Yeah.
There we go. No, it's definitely very interesting. I think one thing to keep in matter too is, so I was telling this to Mike before, is I day trade a lot of Bank of America stock. Okay, and the reason why I do that is, one, day trading just in its own is risky. Okay, so I'm not a big believer in. First of all, I'm a big believer in risky investments, but risky investments that I have control over.
Right. Do you like when you say day trader? I imagine that you're on the phone going, sell, 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 buy, buy, buy.
Yeah.
Super buy, shell.
Cocaine.
Yeah, exactly.
No.
Is that what that is?
No. You just go on Merrill Lynch and put the buy in the sell.
Oh right.
And slap the
Pay your
ass.
$6.95.
Yeah. Actually, no. I get free trades.
Oh, nice.
Because once you're over a certain point, they just keep.
Oh, that's
trades.
right. Okay, I remember. Yeah. Okay, cool.
So it's pretty dope.
Nice. Okay. I still pay $6.95 a piece for that. I gotta factor that into my. I've made $37 this week.
So
I mean $30.05.
There we go.
Yeah,
but
$6.95 out.
Yeah, so if you're gonna do day trading, I think it's smart to, first of all, 2 points. It's smart to do it in a company that you really believe in, for the long term, right? Because then worst case scenario,
right?
You buy here and then it drops like 10, 15%, but then you just ride the wave and then
right. You're gonna get it back.
Exactly.
It's not like you needed that money.
Exactly.
Yeah. Or if you did, don't do that.
Well, that was my second point. Is if you're day trading, invest money that if it just disappears like that, it doesn't change your lifestyle.
Yeah, that's right.
Which is a huge model of how I invest anyway. So
yep, that's right.
If you're gonna put $500 in there or $500,000 in there. Make sure whatever shift that happens, you
Did you
can
hear
ride that
when you
wave.
said 500,000? Did you hear something happen in here?
Yeah. What is that?
I don't know, man. I gotta increase my level.
Yeah.
Yeah.
You'll get there.
Yeah.
Yeah, you'll get there. I'm not there yet,
Okay.
but you'll get there.
Yeah.
Yeah, man.
That's
So
true.
so as long as those two things I think are sound and you got locked down, I think it's fine.
Yeah.
Yeah, I think it's totally fine.
Yep.
So those are definitely my 2 cents. And I'm like, I'm almost so confident Bank of America will continue to go up, as well as some of the other established firms like Morgan Stanley and
Okay.
JP Morgan, that they reported like 22% increase in profit. There's a lot of these financial stocks that are still doing very well, even though the interest rates are going up and the bonds are going up. And so, like, what's going to happen within the equity market or within there? So, and there's a reason why, like, Bank of America, for example, they're going to increase their dividends in June. They're so solid on them, and they've been doing share buybacks as well. So they know what they're doing.
Okay.
And so, I'm not really worried about it. It makes me feel a lot better than investing in, say, like, even like a Netflix or something like that, where there's just so much volatility. And you can make, like, a ton of money because just the increase off of that. Look at Amazon, for example. But for me, myself, was just a risky with it just being in the stock market. I'm already like, oof, fire, man. I'm always like fire. So that's why I kind of just stick with what I know.
Yeah.
And it's worked
Right.
out.
Yeah.
It's worked out.
That's kind of been our message the whole time is whether you're starting a business or investing, do it in something you know. So you know the ins and outs of it.
Yeah.
So you understand the lingo, you understand what's going on, you can interpret what's going on, at least better than somebody who's not in your position. Because there's a certain level of gambling and a certain level of guessing every time that we invest. Even if you're investing in yourself, you're betting on yourself that you're going to make it happen. Mm-hmm. You're gambling that a couple of the wins are going to blow your way. Even if you're the best at whatever you're doing, you still need a little bit of luck on your side.
Oh, yeah.
Yeah.
100%.
Yeah.
100%.
That's just how it is, yeah. It's good.
Yeah, I know. I
Yeah,
feel
it's
good,
exciting.
man.
Yeah, me too. I know.
Anything else you want to share?
Let's see.
Those are most of my thoughts.
Yeah, I
really
would say find somebody that's doing what you want to do and ask them questions. Usually if somebody has reached any kind of level of success, they want to talk about it because it's important to them and they've had to sacrifice to get there on some level. So find somebody, that's your mission for the week. Find somebody that is doing what you want to do and just ask if you can pick their brain, even if it's a 5-minute phone conversation or a 30-minute coffee break or whatever it is, because they're out there. And really what you're doing in that is you're honoring yourself and your desire to do that. And what I really believe is that if you have the desire to do something, then the world is saying yes to it. You just have to wake up to it.
Boom, baby. We're going to end it at that. Lifestyle investing.
Yeah.
Mike, myself. Excited for the next show, guys. Oop, my mouse is dead.